Hello everyone and welcome back to our channel. Today I want to address a problem concerning ETFs for European residents. Specifically, the issue for European residents nowadays is that the new external policies has increased the minimum investment on ETFs not listed in Europe to $500 for investors that have their residence, meaning their place of living, in Europe. What this means? It means that basically, if you want to buy an ETF listed in the United States, for example, you need to buy it as a CFD, and you need at least $500 per transaction. Therefore, in this situation, I was forced to identify alternatives for new ETFs that I could buy even though I currently live in Europe. Please keep in mind that this is not an investment advice, instead is a personal research on this topic, representing in the same time some of the assets that I currently use to invest on a monthly basis. First of all, we need to talk a little bit about a new UCITS fund. So, what this means, UCITS are investment funds regulated at a European Union level. Basically, it lays down common standards for investment funds, so they come with high level of investor protection. So, with this in mind, I search for an all market stocks type ETF. Also, I've looked for an ETF that could replicate the S&P 500 index, something on emerging markets, and lastly, an ETF on the Asian market. So, as a result, in my opinion, if you are an European resident, you should at least consider the following 4 ETFs. You can use the website justetf.com, and here you can search for your preferred ETFs. First of all, let's talk about an all-world ETF. Okay, so these ETFs, MSCI World Index, tracks stocks from 23 developed countries worldwide. Why I found it interesting? Because it will lower your amount of risk. Yeah, because you have already a very diversified ETF. Also, you have a total expense ratio of 0.2%. Yeah, and here you can find every information you want. You have this distribution policy of accumulating. Yeah. The fund is domiciled in Ireland, as many of the funds does, and you can track here its return. Yeah. The return year to date from 2020, it's quite low because we had the pandemic, the virus, and so on. But for 2019, you can see here an average return of more than 30%. Yeah, you can have here also in periods and so on. Yeah, 3 years, around 30%. If you want to see which kind of stocks does this ETF has, you can click here. Yeah, and you'll see the top 10 stocks that the fund holds. So you have here Apple with around 4.4%. Microsoft, Amazon, Facebook, Google, Tesla, Johnson & Johnson, JP Morgan, and Visa, and so on. So, this is one of my preferred ETF because it has a really great exposure and the total expense ratio is not too high. Second, I try to invest in an ETF that replicates the S&P 500 fund. Here, the total expense ratio is even lower, way lower, yeah, 0.07%. Also, with the domicile in Ireland, yeah, let's see. Yeah, you can also see here it has a great exposure, a higher exposure on Apple. Also, you can find here Microsoft, Amazon, Facebook, Tesla, Berkshire and Hathaway, JP Morgan, and so on. The main difference that here you have a distribution policy of distributing, yeah, and not accumulating the dividends. In terms of returns, the returns for these ETFs are even higher than the one on World. Yeah, so I had the first ETF on World, the second one on S&P 500, the third one MSCI on emerging markets. Yeah, all the ETFs are from BlackRock, which is the biggest fund investment in the world. Yeah, this one is on emerging markets. It has a total expense ratio of 0.18. Let's see. Distribution policy distributing, also in Ireland. Yeah, and you can see that the stock with a higher position in the entire ETF, it's Alibaba, then Taiwan Semiconductor, Samsung, iShares MSCI Brazil, and so on. A fourth ETF that I currently invest in, it's an ETF based on the Asian market, let's say, without Japan. Yeah, this ETF tracks equity markets of the emerging and developed country of the East Asian region, but excluding Japan. The difference is that the total expense ratio is way higher than the other three, but is still under 1%. But I want some exposure in the Asian market, so I choose to also use this ETF. Okay, so some of the position are similar to the ones in your emerging markets ETF. But there are also, if you are trying to start from your second page of position, you will see that there are still a lot of new stocks, new companies, and the percentage differs. Okay, so these are 4 ETFs that you can buy from your broker, from your platform, if you are an European resident. And they have really low expense ratio. Really small monthly or annual costs of management and so on. I currently have all these ETFs and some more, and I also have some in some mutual funds. But in my country, the expense ratio for mutual funds is way higher than the one for an ETF. So the average expense ratio that I need to pay for a mutual fund is around 2.1 or 2.2% per year, which is way too much. So this is why I try to research what kind of ETF I can buy, in order to improve my portfolio and also to keep my costs quite low. In the future, after I will have some return on my mutual funds, I will sell them and I will move my money into real estate and into ETFs. Okay, so these are four alternatives that you can use. Basically, if you don't want to have all these four ETFs, you can just choose an S&P 500 index, yeah, because it has the lowest cost ratio, yeah. But I will, for me, I choose to have a more diversified portfolio, and I will choose at least two ETFs, one on ORD and another one on S&P 500. Okay. If these subjects are of any interest for you, then I suggest you to follow the channel, and I will try to upload weekly a new video. Okay guys, all the best.